Hello everyone, Aaron Weber here with the Unicity Franchise Compensation Plan training video. The purpose of this video is effectively to train the trainer. This is a PowerPoint presentation that you can use for your own training purposes. So this video is to teach you how to use that, teach you some of the concepts and methods that I use to teach the comp plan using this exact same PowerPoint. So it's here for your training so that you can be more effective in your training of others. The format of the presentation is basically this. We'll cover key concepts to explain what they are and how they operate. We'll then list the rewards that are relevant to that concept, and then the action items that the individuals need to take to maximize their return or their utility or their value from those concepts and rewards. That's the flow that we'll generally try to take as we go through the presentation. Point number one is to make the point very clearly, very unambiguously, that becoming a manager is that central building block, that fundamental building block, if you will. I also call it the central competency. It is a thing that you will do and sustain and maintain over and over and over. That's a key skill for a new individual to obtain and maintain. A follow-on skill from that is the skill to help and teach others do the exact same thing. Case in point, a diamond in the compensation plan is only a collection of a number of managers. If we understand how to obtain and maintain the manager rank, and then secondly, understand how to find and help others do that exact same thing, we have almost all of the fundamental skills that are necessary to build a great business. And so I always position this to people as our first goal or our first month's goal. I always use the collective is to help you get to manager. It's a great first month goal for us is the sort of language that I use. As part of that conversation, I make sure I define for people what some of these requirements are. Excuse me. You don't want people working away and doing all the good things and they missed some box they're supposed to tick or check, for example, an easy ship or their PV or some TV criteria. You want these very clearly defined, and I do so here in this slide. And as a note on this presentation, feel free to edit the PowerPoint to your satisfaction, to your listing. Make it simpler, make it more straightforward. Probably your editing will improve it, and that's just fine. I always make sure, though, that I list in some complete way and maybe even provide a handout to folks as to the boxes they need to check to ensure that they qualify. So I define PV. Obviously, PV, as we know, is all orders placed through your personal account ID number, whether you're involved in that transaction directly or not. TV, and these are new terms to people. We throw them around willy-nilly, but new people need to have them defined and understand them clearly. TV is all of your PV. It's your first month's people's volume, no matter what volume they do. It's all of your non-managers frontline and non-managers beneath them. So any leg that has no manager in it, or down to that manager, I should say. And obviously, those who are frontline that are already managers, their easy ships still count. So I help people understand how these concepts work, what they are, and how they're made up, because that underlines, if you will, the building activities. I also create the distinction in terms of making manager 1,000 TV in 1 month versus maintaining manager of 500 TV in an ongoing month. So then I talk about, well, how can you become a manager if that is our goal, if that's something that is worthwhile of pursuing? Well, I get into this nice alliteration. You can buy it or build it. If you buy it, you can do your 1,000 PV, which is also part of your TV right now. We're done. Check the box. Move on. And that is a solid and strong and powerful way to begin. Or you can build it. And I say to folks, if you choose to build it, that's wonderful. If you do choose to go down that path, here is the structure I recommend. And I show them what I call the 4-250 model, which is they come in, do 250. They find 3 other folks, A, B, and C, that each do 250. The aggregation of those 4 250s is 1,000. They end the month as manager. More importantly, they set themselves up for success later on, which we'll show as we go forward. So buy it or build it. I demonstrate my indifference. It depends very much sometimes on what I had for breakfast as to which one I feel more passionately about. And it provides a way to not partition or not pigeonhole people into a certain path. I've learned I'm not that good at guesstimating people's motivations or abilities or where they're at. And so if I push the buy it model and that scares them because I'm being overly strong, then I may lose them or turn them off. If I soft sell it and say, well, let's go the build it route, they may say, well, geez, I want to get engaged in this thing, and what's the hold up, Aaron? Why are you soft selling this? Aren't you confident? I want to move at a greater speed than what you're recommending. So I don't push them one direction or the other. Buy it or build it creates a great intersection where they make a decision. The decision they make to drill down on one or other tells me a lot about where they are, what their commitment levels are, what their resources are like, and how rapidly and seriously they want to build the business. Buy it or build it helps flesh that out. At the same time, I'm happy either way. Then I go through the rewards of being a manager. Obviously, as a manager, particularly if you buy it, you're going to have a working inventory. You can become a product of the product. You can speak with personal fervor as to how the products work. It allows you to create more timely delivery to the customers. As you sell the product, as you speak about the product, other people will want the products. And then you can more ably say, here it is right here, as opposed to, well, I've got to get it to you and I'll get it to you by next Thursday. Properly capitalized. In a real business sense, you want to start a business with a proper amount of capital and assets. This does so. It also creates an enhanced level of commitment. And for me, as an upline perspective, and for you as you become an upline or are an upline, it creates huge signal value as to who is committed, who is doing the right things, as opposed to just saying they're going to do the right things. It also provides access to greater rewards as we move forward, and we'll demonstrate that to them, reinforce that point. And most importantly, it sets a pattern of duplication. I always make the point, as I'm training you people on the compensation plan, that duplication is important. People will do what you've done. In fact, they will ask two questions. They will say, assuming I'm signing up Sam, or Sam is signing someone else up, I should say, they'll say, Sam, well, what should I do my first month? Very quickly followed by the second question is, well, what did you do, Sam? And so having that conversation before that other conversation occurs in terms of, Sam, you want to be able to answer that question that I ended my first month as manager. That's our goal for you. And here's how we do it. And by the way, here's some lessons I learned on that journey. And we begin this collective intelligence methodology of building the business. So what are the action items in terms of making manager? Well, obviously set the goal to end your first month as manager. Keep in mind the small print here. You can become manager anytime you want as long as you reach that threshold of volume in any 1 month. And I make that point to people. There's no undue rush here, but the benefits are obvious, and so you want to be there. So if you want to be there, let's just check that box now rather than later. So it's at any 1 month, but I make the strong suggestion that we may as well do it in our first month. And then the other action items are find and help others do as you've just done. And then, season 3 in my language, help those people that you found in step 2 find and help their people become manager as well. You can see that pattern of duplication going forward. And then obviously sustain those activities, sustain those things that help build it as we go along. Then I highlight for the first few months. I say, look, the first few months, the key activities are to make and sustain manager and find and help others do the exact same thing and then teach them to do that exact same thing. And those activities are primarily rewarded and funded by 2 sources. One is Fast Start, the other is Director Lifestyle Bonus. We have about 10 profit centers or way to make money here at Unicity, and I say to them, look, I'm going to give you an introduction to all of them, but I'll give you a deeper dive on the first 2 because for the first few months, the vast majority of your income will come from those 2 areas. So those are the ones I want us to very clearly understand. But I also want you to feel positive and anxiously await the arrival of the other features. I'm going to give you an introduction to them as we go forward. So, Mr. New Guy, I'm going to primarily focus on those rewards and activities from which you'll be rewarded and for which you should engage. You may as well do what you get paid to do, and the things you get paid from are Fast Start and Director Lifestyle Bonus. So point number 2, Fast Start. Here's the concept. We want you to start fast, as the name implies, and we want you to be rewarded for that. More particularly, we want you to be rewarded handsomely for being front and center in the right key activities, which is to find, teach, and help others do what you've just done, i.e. make manager in the very first month. We want you to be maximally or optimally rewarded for those best key activities or for being close to them and driving them. And we want you to understand the concept of those who do the good work get the maximum payout. What gets rewarded is what gets done, and what gets done is what gets rewarded. Then I show them the graph there, and this is where people generally start glazing over. And I said, look, don't worry about the detail here. You're going to have the notes. These are all available online, and there's certainly plenty of tools to teach you this. But the point I want to raise here, Mr. New Person, is see that white box at the top with enroller and enroller's sponsor. There is the benefit, or there is one of the benefits of being a manager versus something less than that, junior manager or something else. For your 1 month TV of 1,000, which you can again buy it or build it, your enroller fast start goes from 15% to 30%. You double the reward. So if you ever plan on being a manager, and if you ever hope to introduce someone to the business, you may as well do so as a manager. You may as well bring them in as a manager because they'll want that same benefit, and your reward is effectively enhanced. I don't spend too much time here, but I do make sure they know what it looks like so that, and where they can go find that for a reference point thereafter. So what are the action items for Fast Start? Well, obviously, you want to prefer to be a manager, 30% versus 15% or even 0 if you're not. You want to find and help others do as you've just done. This is a common theme I use in my training. Teach what you've just done. Lift people to where you are. Lift people to where you were last month. You're the most qualified person to do that because you've just done it. It begins this language, this concept, this understanding of duplication, of doing yourself, turning and helping others do what you've just done. It's a very repetitive exercise, but very profound in that the repetition causes us to do it better and better and better and get more and more qualified at doing so. So you want to make manager your first month. You want to find and help others do that exact same thing. And you want to be close to the key activity. You want to be the enroller, or as much as possible close to that, so that you can make sure you capture the payout from Fast Start. And you want to make sure that you move along in ranks, particularly as your organization begins to grow. So what are some of the key considerations for Fast Start? Well, keep in mind you're paid on the first month volume of new people. Fast Start is how first month volume is effectively paid out up to this 1,000 points of PV. The white box, the enroller and the enroller's sponsor portion, is based on levels or distance from the activity that's going on. Thereafter, the orange box in the grid that we reference is based on rank. And that's a bit confusing to people to start with, but we just lay that concept out there and we'll tell them we'll circle back around to that. And the point I make is that there is no limit on the number of people or the time. Fast Start isn't something you've only got for the first 90 days of your Unicity life. It is only not limited to the first X number of people. You want to sponsor one person or 100 people a month, or you want to sponsor 100 people a month for 100 months, Fast Start will always be paid out. So again, given that there's no restrictions on time or number, you may as well maximize it, and I make that point as we go along. So then I give some examples. Usually I draw these out on a whiteboard, or in conversations with individuals, I draw them out based on their personal circumstances so that it's customized to them. But here's a generic example of the Build It methodology in a month one. You come in and do 250. You're asking A, B, and C to do nothing more or less than what you've just done. Again, that duplication is there. You get, because you'll end the month as manager, and here's the point, it's not how you start the business, whether you buy it or build it in that first instance as a manager. It's how you end the month that determines your rank, that therefore determines your Fast Start payout. So you can come in technically and do a point of PV and then finish it off with another 125 later in the month and find 750 other people each doing a point, which you technically couldn't do, but to use an extreme example, as long as you end the month when the computer does its month-end run and sees that you've checked the box relative to PV and TV, you'll be a manager and be paid as such. It's not how we start, as in life, it's how we finish that first month. So you've got A, B, and C there, each doing their 250. You get 30% because you're going to end the month as a manager, which means you're going to be $225. I make the point, depending on the market, that you are well on your way to getting your initial investment back. In fact, one of our goals is very early on in the first month or two is to get you to a zero cost basis. When you demonstrate that level of concern to people and that language to people, it instantly changes something in their mind from this person has my best interest at heart, this person is looking to help me get a return on investment, isn't just looking for transactions for themselves. The great thing with a Build It methodology, and I'll go on to show you another example where I combine the two, is that you've set up a structure, A, B, and C, and yourself for month 2 and beyond. To maintain the manager rank, you need 500 TV. Well, good thing is the PV authorship requirement for you and for A and for B and for C, because you set that structure in place on the build it first month to make manager, you now automatically have the structure in place to automatically qualify you as a manager going forward. So it's not just make manager, but it's make and sustain the manager rank. That's the key. So you can show them the other benefit of becoming manager and doing so in a build it methodology is that you've instantly checked not only the first month's box, but every month thereafter box because of the structure that you've established. And I always do this when I teach build it. I've shown them the buy it, the 1,000 points, check the box, and I speak positively about that because I feel positively about that. And then I show them the build it using 250, and then I say, once they've understood the concept and they see that I'm looking out for their best interest, and then I say, now imagine for a moment, Mr. New Guy, if you combined the buy it and build it, if you did the 1,000 points in your first month, check that box, have the working inventory, all those benefits, and you looked for A, B, and C to do likewise. Whether they buy it or build it doesn't matter. A maybe has A1, A2, A3 beneath them, each doing 250. But the bottom line is leg A, leg B, leg C, or person A, B, and C as an individual does 1,000 points. The reality is, on the individuals doing the 1,000 points, your income has now jumped to 1,000 points times 3 people times 30%, $900. Plus, you bought more inventory, so you're going to be making sales of inventory. You're going to be getting the money back from that purchase as well as a margin on the sale. So very quickly, and more appropriately, you could probably get to a zero-cost basis, if not make a profit in that very first month, because you now have inventory to sell that you probably didn't have at 250. And you've set a higher level of duplication, you've set a higher standard for yourself and for others, and people will do what you've done. So think forward, Mr. New Person, as to what you want to have happen in your business going forward. And then I say, as a segue into the next principle, and you're very, very close if you did this with 4,000 points of organizational volume to qualifying for the first month of Director Lifestyle Bonus, which is what we'll discuss in the next concept. So I finish off one with a super duper example. I don't start with that because, again, I don't know where they're at in terms of their what I call thresholds of pain, but I do want to give them the options, both of which I feel strongly about, but I do want to close the examples of those buy it or build it options with the combination of the two and show the power of that compared to the other options, and finish it with, and how close are you now to Director Lifestyle Bonus, which we'll now cover. Which brings us to principle number 3, Director Lifestyle Bonus, the concept. The concept is we want to pay bonuses for the beginnings of building a sustainable long-term business from which you'll receive leveraged and residual income. There are 2 types of bonus in Director Lifestyle Bonus, lump sum and monthly amounts. They're based on achieving and maintaining, because we want to build a real, authentic, predictable, sustainable business, not just some flash in the pan. We want to follow business principles that are equally as authentic and workable and proper and real as our products. So it's based on achieving and maintaining rank. And it's achieved by finding, teaching, and helping others do what you've just done. The way you make director, I say to folks, is to find and help people make manager, which is something you're already qualified to do because you've just done it. And if you do, easy math, 5 people, first month managers, you are a director. It's not, I want to make director. It's how do I help my people do what I've just done or come to where I'm currently sitting. That activity is what moves you along. That's the concept we want people to start to understand. So again, here's one of these orange charts, which people tend to glaze over again. But I say, look, the simple thing here is rank on the left, lump sum bonus after you hit and sustain that rank for 2 months in a row, $2,000 for director, for example, plus for 12 months thereafter, you get $200 a month. Now, $200 a month isn't great, but it's freebie, if you will. It's a bonus. It's on top of all of the other earnings you'll achieve, fast start, and other things that we'll discuss. All these things that we call bonuses are exactly that. They are bonuses on top of the usual income levels, and I show the sort of bonuses that can be had here. So what are the action items? Well, find and help others do what you've just done. See that common theme coming through, which is make and sustain the manager level. As a consequence of that, if you do it in the right shape and form and amount, you'll become a director, which is where I start introducing now the concept of OV and legs. A director, for example, is 5,000 points of organizational volume, which is everything from you south, with 3 legs of at least 1,000 points each. And then I introduce the concept of balance with no more than 60% of the required volume, which in this case is 5,000 points, or 60% of that is 3,000 points, coming from your largest leg. We want you to build a genuine, real, balanced business that proves, that demonstrates, if you will, that you are the builder and not just someone piggybacking on someone else who's doing the work. So what are the key considerations? Well, the lump sum is paid out after getting the rank for the first month and sustaining it for that next month. So after 2 consecutive months, the lump sum is paid out. The monthly amounts are paid out up to 12 months thereafter. So each time you maintain that rank thereafter, you get that monthly amount paid out to you. The point I raise here, and it's achieved more often than sometimes people realize, and I want to let them know that it is achieved sometimes more often than not, is you can double up. For example, you could hit senior director in month 1, sustain that in month 2, and you get director and senior director lump sum paid simultaneously in the lump sum, and you get the monthly amounts for director and senior director paid monthly for 12 payments thereafter. I reinforce again, keep in mind that director lifestyle bonus is, as well as all other income opportunities, they are a bonus. That ends that first introductory section. And I say very frankly at this point, those are the 2 concepts that the primary amount of your check will come from. Yes, there'll be other portions that will contribute to that, which we'll cover here, but I'll cover them in an introductory way because the vast majority of your income will come from Fast Start and Director Lifestyle Bonus. That's why you want to understand those concepts. More importantly, that's why you want to understand what you have to do to maximize the value to yourself of those concepts. But we do have other sources of income. You get a personal rebate of 5% of all the PV done through your account. That can be not inconsequential as you build a large customer base, and we do believe in customers because we have real products that fill real needs for real people. There's also the margin from sales between wholesale and retail. It can be up to 50%, some are even more than that, but I use a 50% number there for the purposes of rules of thumb, if you will. You'll also in that first, that second, third, fourth month begin to get these organizational overrides, particularly if you build your business properly and increase in rank. Those overrides and commissions will begin to be earned and increase over time, and in reality, Fast Start and Director Lifestyle Bonus are ways to reward you for engaging in the correct activities while you're building your overrides and commissions, your residual and leveraged income. That's the point I make at that point in time. So this slide is a segue from what to focus on versus what I'm teasing on or giving conceptual understanding on for going forward. And the income continues, where I make this point again. The first few months focus on Fast Start and Director Lifestyle Bonus. They are very powerful earning mechanisms in their own right, and we have very powerful further mechanisms that follow thereafter, and the next section covers those in an overview fashion. So, concept number 3 is the Infinity Share Bonus. Now, you and I both know that the vast majority of people's checks as they go forward comes from this. The reality is that's not true for those first few months. The vast majority comes from Fast Start and Direct Lifestyle Bonus, which enables us to enhance the earning opportunity while we're building the organizational volume, while we're building the true leveraged and duplicated income. But I explained to them the concept of what they're looking forward to. It's calculated based on your rank, so rank becomes important. As your business grows, I make the point to them again, this is where the vast majority of your ongoing consistent income will flow from. But for now, it will not. That's why we're just conceptually introducing it to you, not teaching in great depth. And it's based on the following chart, which is a chart we're familiar with, and a lot of 5% there. But again, I show them the chart, get them familiar with it so they can see what it looks like, so they know where to go to later on and they know where they have access to it. So what are the action items? Well, achieve whatever rank you wish to, move up the ranks, and the way you do that, again, I reinforce this point, is by helping people do what you've just done. Keeping in mind these concepts we introduced at the beginning of Director Lifestyle Bonus, so we're layering information for people. What's the OV required for that rank? Keeping in mind the PV, TV, 125, 500, that doesn't change. The legs required as indicated, and the balance, I reinforce that point. So over the course of this training, they're going to get some of these points 2 or 3 times, which will hopefully help feed their memory a little bit more in terms of that. So what are the key considerations? Well, your payout's determined by your rank. Get a higher rank, you pay deeper in your organization. That's a function of how many shares, and I use that word because it's a new word, helps us define our compression model more carefully and more uniquely. And at this point in time, I would add, for your benefit, the Unicity compression model is the most powerful compression model in the industry, Be careful which terms you use. Generations and levels have some ambiguous methodology. That's why I try and use the word shares, because no one else does that, and it is a more accurate description of what it does. It's essentially, as point number 3 says there, a rank compression. We don't call it that because there are some exclusions or conditions to that, but essentially it is a rank compression. For example, if you're a director, you'll get paid based on 3 generations of directors. You've got director, manager, 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 director, manager, 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 director. That's how deep you'll get paid. Likewise, diamond gets 9 generations of diamond. How deep would you get paid if you're getting 9 generations of diamond in your organization? The answer is very, very deeply, and much more deeply than most other plans pay or than most people assume. So be careful that you don't get drawn into an apples and oranges type argument. We are vastly superior in terms of methodology. President's Club bonuses. Well, we want to reward you for achieving meaningful levels. We believe in providing a reward when you've done something significant and meaningful. We want to have that reward to be significant to begin to create or taste that lifestyle that is part of the drive of what we're doing. They operate just like the lump sum portion of Director Lifestyle Bonus. So if they've learned that, which they would have, and practiced that and received those, they then know how these operate. Difference here is they're paid after 3 months. So make it, sustain it 1, sustain it 2, 3 months total. That's when these bonuses are paid out. I make the point again that all these bonuses, again, can be paid simultaneously. And I just had a person just last month, actually. Their first month qualification was Sapphire. Their second month was Ruby. Their third month was Diamond. So they were paid out the Sapphire after the 3 months, but they were already 2 months into their Ruby and 1 month into their Diamond. So you can set these up quite quickly, particularly if you're growing quite promptly. And if you're teaching people to do what you've just done, and if you're consistent and they are doing what you've just done, you can grow consistently and rapidly. Here's the numbers. So I say, okay, these numbers are elevating. We start a Director Lifestyle Bonus at 2,000. We start the President's Club bonuses at 10,000 and go up to 50,000. Those Director Lifestyle bonuses and these Presidential Club bonuses, again, are not limited as to scope or time. They are there for you whenever you want to get them. There's no Damocles sword hanging over you. I've got to get this by X time, etc., etc. We're not playing that shell game. I make sure to make that point at the Director Lifestyle bonus area, which I don't think I did in this presentation, and I make it again at this point, particularly once you start getting a lot of digits on the number that they're focused on. Because sometimes companies promote these big checks, but the reality is you've got to build at some superhuman rate of speed to even think about qualifying for them. In Unicity, take as long as you wish. But again, don't take as long as you wish. You technically could, but if they're there for you and the company's happy to send you that check, why wouldn't you want to get it sooner rather than later? So what are the action items? Again, very similar. Achieve and sustain the ranks. Build a real, genuine, authentic, predictable business. Help others get to where you are or were. I.e., to become a presidential director, all you've got to do is help your managers become director, help those directors move up the ranks to senior and executive, and guess what? You'll become presidential. This whole servant leader, where your entire focus is helping your people get to where they want to go, will get you where you want to go. That's how you get there. And again, be mindful of all the requirements. The last thing you want to have happen, particularly if someone's on their pathway to these rewards, is they miss it because they didn't check some box. They miss it because of some technicality. Help them know as they anticipate it, as they work towards it, as they get to that first month or in that first month. Reaffirm to them the qualifications. Make sure they're on track, as you don't want to have that unpleasant surprise, shall we say. The next concept, the additional franchise position. This gets a bit more complicated, but you can simplify it in terms of an explanation. Once you achieve Diamond, you can re-sign or re-sponsor yourself as your own front line or as your own upline, which enables you to get paid 2 times, 3 times, or up to 4 times on the incremental volume in those new positions. Essentially means that once you've sponsored yourself 3 more times and have 4 positions, any volume in that 4th position deep, you get paid 20% on an incremental, leveraged, residual basis. This whole industry is built on 5%, and people get excited about that. We can offer, in that 4th position, the ability to, on a residual recurring basis, receive 20%. Most companies only pay a 20% on their equivalent of Fast Start. We pay 30%. We can offer 20% on a recurring residual basis. Yes, it's in the stratosphere when it comes to the amount of organization you've built, But when you get to diamond, there is a double incentive to go build some more on that double diamond. There's a triple incentive to go build more on that triple diamond, and a quadruple incentive to go build more into that crown diamond position. That's why you see the key leaders at Unicity still pushing, still moving, still building new business. Because frankly, the best thing for your existing business is for them to always see you be building new business in and of your own account. It's a great reward. The concept here is just you can get paid 2, 3, 4x on your incremental volume going forward if you structure your business properly. Unheard of, unparalleled in the industry. And there's a diagram of it where you've got you as diamond number 1, you've got those little legs off to the left and center, and then you can sign yourself as your own leg 3. Anything that was leg 3 and beyond at that point can then be placed in U2, and you get paid double on that volume. So why wouldn't you want to park some extra volume there in terms of a few extra legs right now while you anticipate building towards that? Same thing when double diamond gets $100,000 in leg, you can then start leg 3. When that gets $100,000 leg, you can then start leg 4, up to again this incremental amount in crown diamond position of 20% on a recurring residual basis. And that's another map. That's what's shown in the catalogs and the brochures. Show that to them. It looks like a complicated chutes and ladders diagram, but let them know that's there. And again, we're just teaching the concept. You know, some who have more experience in the industry will be more turned on by this concept. Others will be lost. You gauge that based on the body language you're getting back. So what are the action items? Well, get to diamond, obviously. Help others get where they wish to go, and that'll get you where you get to go. This is an action item common to every one of these concepts. Create your AFP so you can get double paid, and you can repeat it for the triple and the crown as we go forward. Chairman's Club bonuses. What are the concepts? Well, again, we want to significantly reward you for achieving high levels. This significant reward is used to create lifestyle. It's paid in support of a lifestyle objective. The other ones are all just a check or cash or a briefcase full of money, or more correctly, a wire transfer. These ones are to fund a specific lifestyle objective. Again, they're paid after 3 months, and again, they can be earned simultaneously. Well, what's the ranks? Well, double diamond 150. Notice the bonus value. So you go choose the lifestyle thing you want. If you float it or fly it or want to live it in a second home or whatever it is, the company will fund that to that amount. So what are the action items? Well, get to diamond, double, triple, crown, etc. Help others get where they wish to go. Start planning your lifestyle, and feel free to earn them all. Again, that helping others get where they want to get to gets you where you want to get to as a natural consequence. Theme is woven through all of this. And here's the big chart that we have, again, showing them what it looks like, not going through it in great detail, but conceptualizing and letting them know where it is and how to read it. For example, you list the ranks there. I don't spend too much time on junior manager because manager is where you want to be. The recommended lead structure, emphasize that's recommended. We don't play the game of you've got to spin plates and have people outside your control that you don't control directly have to reach certain thresholds. You rely on other people's performance for your own qualification. We don't play that game. That is a recommended leg structure. It's a pretty sound recommendation. So if you want to make a director, help one of your frontline folks make senior manager. Help another one make senior manager, and go find a new manager, and you've made director. And then obviously your PV, which is done by auto refill. The TV requirements, those are consistent all the way through. The legs required, the total OV required, and a demonstration of the balance using a real number, not just a percentage. People get that. Certainly helps if you start drawing this out with individual circumstances and goals. Once they've built their list, then you say, okay, let's assume this person's a manager, this person's a manager. Use real life examples with real names from their lives and show them, build a roadmap using this key, if you will, of what rank they would then get and therefore what the reward would be. Very much helps to do it one-on-one after the presentation. Have you and your leaders fan out amongst the people and diagram it individually for people based on their individual circumstances. So that's the Unicity Franchise Compensation Plan. Key point, it only works if you do. It only works if they do. So let's go to work. I always use that collective, and it's all based on activity. Again, focus on fast start and director lifestyle bonus for those first few months because that's what's relevant. Again, reinforcing the point of helping others get where they want to go, or where you've just been, or where you currently are, and you'll get all the rank you wish if you're getting good at that. It's all here for you. Again, Mr. New Person, we showed you in great detail fast start and director lifestyle bonus because that's what's relevant, and then we gave you a taste of the potential bonuses and income that's available thereafter. So what's left to do but get going, doing those things that need to be done. This is a separate conversation. It can be rolled in as part of the Getting Started program. It can be given as part of the What Now presentation, which immediately follows, or as a separate meeting to the Why Unicity presentation. It's valuable. It's a stitch in time. The more you focus on this, the more you teach this, and maybe give handouts relevant to this, as well as the comp plan brochures, or provide links as to where they can go find them for themselves. It saves you some pain going forward and enables your new people, and you owe it to them, to give them the best possible start in a maximally informed way, so they know what they've got to do and therefore what a reward they can anticipate as a consequence.